Good morning, listeners, and welcome to the Trade Talk podcast. On Tuesday, due to exceptional strength in the global cues, the market has managed to surpass the level of 17,400. However, due to weakness in top index heavyweights, namely Reliance Industries, HDFC Limited, Infosys, Bajaj Finance, and Hindustan Lever, the Nifty failed to rally further. As the market failed to sustain at higher levels, we need to be cautious with short term trading long positions until the market is not crossing the level of 17,450. Below the levels of 17,450, the Nifty may again fall to the levels of 17,300 or 17,250 levels where it has multiple supports. If we see the trend of last few days, then the market has spent time between the range of 17,400 450 on the higher side and 17,300 250 on the downside. So still the market is holding the view of range bound activity, and that's the reason we should be buyer if we see the market is dropping to the levels of 17,300 with a stop loss at 17,230 on the downside. The Bank Nifty is trading flat. It is around 36,500 550 levels. We need a close about 36,750 or at least 36,700. In case if we see the Bank Nifty is crossing 36,860, then it will have major bullish impact or major bullish signal. But otherwise, in the absence of closing above the levels of 36,700, we may see range bound activity between 36,250 on the downside and 36,750 as we discussed. FI has bought heavily to the tune of 1600 crores on Tuesday. However, on the FLO segment, they are reducing long positions, but they are reducing positions gradually. So on the day of expiry, we need to see that how actually they are holding the positions on Wednesday. So in today's date, whatever the position that they will keep, based on that we can decide the trading strategy for Thursday. Treasuries rallied and US stock declined after a less than forecast increase in inflation was seen as giving Federal Reserve officials more flexibility when it comes to pulling back on stimulus. The dollar edged lower. Yields on benchmark 10-year notes fell as much as 6 basis points to 1.26 from 1.2829 levels. On the speculation that Fed to announce the start of its reduction in asset purchases in November or December. So falling bond yield is not positive for equity markets, and that's the reason we saw some sell off in US equities in yesterday's trading session. It shows that investors are shifting their investments from equities to the bond market, and that's the reason it should, if it starts falling, I'm going to say if the 10-year bond yield starts falling, then it have a negative impact on equities. But for the time being, if we see our markets, then here we are seeing some moderation in inflation, as well as FIs are infusing fresh inflows in last few days. So that's the reason we are expecting downside limited for the market. For the day, we are going to focus on metal companies, again on few FMCG and pharma companies, along with we need to see that whether the auto sector participates or not. That's all from my side for the day. With this, I am ending today's morning podcast. Thank you very much for listening in and have a great day to all of you.